You've heard of FANG stocks, right? What if you could find the next FANG before the stocks blew up? What if you could have been investing in Amazon at $100? Is Phaser the next FANG? Stay tuned to find out. So what I'm going to do is I'm going to break down Phaser. There's 5 stocks in the acronym Phaser. I'm going to tell you what each one is, give you a little information, a little background about each of those stock picks. And then at the end, I'm going to do a recap and I'm going to show you how you can capitalize on these gains without necessarily owning the individual stocks. Stay tuned. Okay, so you've heard of FANG stocks. What are Phaser? They're disruptive growth stocks. It's something that Motley Fool came out with. I almost said Motley Crue. Something that Motley Fool came out with. And what we're going to do in this video, it's going to be a pretty quick video in terms of the length of my videos at least. I'm going to tell you what they are, what each pick is. I'm going to go through each letter. There's 5 stocks, of course. And I'm going to, at the end, give you my opinion, whether or not you should buy these stocks and give you some tips. All right, the first stock, the letter F. No, the F is not for Ferrari. No Wheezy F, baby. This is going to be Fastly. It's been one of my favorite picks since 2019, since the IPO. You've seen a couple of videos that I've done on Fastly. I talk about it in the Facebook group. So some bullet points on Fastly. It's a first mover advantage in edge computing. It's the only pure play company that's focused on edge cloud. Edge computing improves user experience, and what it does is it moves the processing work closer to the end user. So what they do is they take it the next step beyond CDNs or content delivery networks. And I'll give you an example. I think this is a really good example. So storing that hot Netflix movie in the local telecom facility in your town instead of sending that data from a central data center each time someone in your area wants to view it. This saves distance and therefore time. It makes the cloud faster. It makes the network faster. It makes your experience faster as an end user. Fastly goes beyond that. Instead of moving a file to the edge of the internet closer to the end users, it also moves the logic and the processing to the edge. That means the thinking that you're demanding from a website is done closer to you, which means the answers will be fed back to you faster. Fastly is a great name. It also means the data you enter is more localized and siloed, therefore increasing security. Fastly, stock ticker FSLY. Okay, up next, A. What does the A stand for in Phaser? It stands for Appian, and many of you might not know this company. What they do is they provide a low-code software development platform that essentially makes customized applications easier for non-programmers like me to build. So you don't have to know programming language to necessarily build software. Only Appian natively unites all the capabilities required to deliver impactful end-to-end processes across your organization. Now you can build more powerful apps and dramatically increase productivity. It also has RPA, that's robotic process automation. It automates routine tasks in a workflow and integrates systems without APIs. If you're familiar with APIs, it also does BPM, business process management, design, execute, manage, and optimize complex processes with industry leading. They call it iBPM. And then the case management is also something they do, automate collaborative work and exception handling with best-in-class capabilities. And then artificial intelligence, AI, make your applications work harder and smarter, and they're integrated. Their AI actually integrates with Google, with AWS, Amazon Web Services, as well as Azure from Microsoft. And decision rules quickly define simple to complex business logic and execute it automatically. So what does this mean? So with old school custom coding, the speed to business and the value was very limited. It took a long time to build this stuff. So the low code gives capability to turn great ideas into business applications up to 20 times faster than banging out code. And here are some of the benefits. You can onboard your customers faster. You can quickly take advantage of fast-moving business opportunities. You can give employees access to the information they need anytime, anywhere, and on any device. That sounds like a pretty good thing right now with the work-from-home environment. Streamline your processes. It also creates a consistent customer experience across web, social, media, and mobile, and more. And by favoring visual composition over writing code, this low code breaks down barriers that hamper collaboration between business and IT. If you work in either business or IT, you know that there's oftentimes some headaches between the two. They don't always get along. They don't always agree how things should be done, kind of like oil and water, different personalities. This will allow to break down some of those barriers that hampers that collaboration between the business and the IT within your organization. Stock ticker on this on Appian is APPN. What does the Z stand for in Phaser? Zoom. And obviously this stock has been on fire with COVID-19. It's made a huge run. It is very easy to set up, use, and manage. The nice thing about it is you can have up to 100 users at once. So it is very good for modern communications with your team being spread out all over across the United States, across the globe, and being able to work virtually and communicate with people across the globe with your team, as well as clients and family. Single platform for meetings, phone, webinars, and chat. Connect via desktop clients, browsers, conference room, and mobile devices. It really is the best value and return on investment when you compare it to some of its competitors. And what I think is really strong with Zoom is their app marketplace has over 200 integrations with leading apps like Slack and PayPal, and it really extends the power of Zoom. Now, this is a stock that I own through ETFs, but I traded it in the beginning of the IPO. I made some good money on it. I didn't hold it long term because I thought it ran up too high, too fast, and it kept going higher and higher and higher. And I will say, if you look at the growth and if you look at the profit margin and you look at just the company as a whole, the stock is very, very high. I think the last time I saw, they said that the valuation of Zoom is worth more than 7 top airlines combined. So that probably is a little bit stretched, but don't count out Zoom here. I won't be surprised if it goes even higher. The thing about it, it's so easy to use. My family actually just used it for my cousin's graduation, and it's really good. It doesn't have a lot of lag. It's very user friendly. My mom was able to figure out. My aunt, anybody of any age really can use Zoom, and a lot of people really like it. And people will say, well, it doesn't matter. It's free anyway for, people that use it for family if they don't have an enterprise license for business. That is true, but there's a maximum time of 40 minutes. And with quarantine, a lot of people have actually upgraded, to a paid account because they wanted to have family chats that were longer than 40 minutes. Now, the question with this, is it sustainable? Will these people continue to pay those licenses? That's debatable. But what you can say is that businesses have adopted Zoom. It's now part of the culture, and it's going to be pretty sticky. It's going to be hard for that to go away. I work with a lot of clients on the West Coast. When you think of University of California system, California State University system, lots of others, they use Zoom exclusively for everything they do, from training their employees to collaborating with team members, et cetera. So this is Zoom, the stock ticker. Don't get this wrong, because there's been some mistakes on the stock ticker and people are trading the wrong stock. The stock ticker for Zoom is ZM. The E in Phaser stands for Elastic. You might have heard of Elasticsearch. Is it the next Google? Let's take a look. So Elastic is a search company that powers enterprises' search and security solutions built on the technology stack that can be deployed anywhere. From finding documents to monitoring infrastructure to hunting for threats, Elastic makes data usable in real time and at scale. It was founded in 2012, and it is a distributed company with elasticians. How do you pronounce that? Elasticians around the globe. Excellent. Okay, elasticians. Learned a new word today. This is open source. So you say, well, it's open source. How do they make any money? Well, there are paid licenses. So the idea is to get people, using it, get them addicted to it, and then expand off of that footprint and to expand licenses. So what can it be used for? It's kind of cool. It can be used for numbers, text, geo, structured, unstructured. All data types are really welcome. It's a full text search, and it just scratches the surface of how companies around the world are relying on Elasticsearch to solve a variety of challenges. There are a lot of businesses that use this, and it can run on AWS, Amazon Web Services, GCP, which is Google Cloud, Azure, which is Microsoft, of course, and then never wait for the latest versions or features, which is really handy. It models behavior using Elasticsearch data to find unusual activity, infrastructure problems, and business trends that eyes on screens simply can't catch. Machine learning on Elasticsearch service is flexible in a wide range of use cases and data sets, allowing you to visualize results in real time. So, you know, this still might not be clear to you what Elastic is, and you certainly can go research on your own a little bit more. I do like this company a lot. Is it the next Google? That's kind of hard to say, but it has about a $6 billion market cap, and there definitely is opportunity for a tremendous amount of growth with this. It's a high risk, high reward play, and it's the E in Phaser. What's the anchor in Phaser? What's the R stand for? It's Roku. And you've all heard of Roku. You know what Roku is. Streaming. You know, a lot of the devices and operating systems are already pre-installed on televisions, which makes it, you know, easy to use, and it's really expanded their footprint. It allows users to stream video from many cable or streaming providers directly to their TV with an internet connection. It's really easy to use, of course. It provides free content to users connected to Roku devices. And Roku targets pay TV subscribers and users of popular streaming services such as Netflix, Amazon Prime Video, and others. Competition, you know, is large and with the technology space, with companies like Amazon, you know, with the Fire Stick, there's Google Chrome, there's Apple TV. So there's a lot of competition, but it is very easy to use, and they have a lot of these television licenses where, like we mentioned earlier, that Roku is pre-installed on the television, which has really helped them grow significantly. It's easy to use, but can they compete long-term with these big boys? You know, that's debatable. You can look at the revenue. If you look from 2017 to 2021, it has grown consistently, but the percentage change, or the actual revenue growth, the percentage growth has decelerated significantly. So that is one thing to keep in mind with Roku. Stay tuned. I'm going to break down these 5 stocks. I'm going to show you again what each stock is, what each letter represents for the stock. And then I'm going to give you my take on which ones you might want to add to your portfolio and some tips of how you might be able to capture some of the performance of these stocks without necessarily owning the individual stocks. So stay tuned. All right, so there it is, Phaser. Let's do a recap of what each stock is, and then I want to give you my 2 cents on which stocks I think you might want to add to your portfolio and how you might be able to do that strategically. So stay tuned here. So Phaser, the F again is for Fastly, stock ticker FSLY. The A is for Appian, stock ticker APPN. And then we have Zoom, stock ticker is ZM. Next is Elastic. The stock ticker is ESTC. And then finally Roku, and you can't mess that stock ticker up because the stock ticker is Roku. So which stocks should you add to your portfolio? I mentioned earlier that Fastly, I've been a big fan of for a long time. I think Fastly is the strongest stock out of these 5 long term. But with that said, all of these have tremendous potential. Now, if you look at some of the ETFs, so if you haven't checked out the last video I did, the ETF on the Wisdom Tree Cloud Computing ETF, I'm going to put a link there up on the top there. Go ahead and take a look at that video. And then previously, I've also done a video that compares the ETFs Sky and ARK. So if you haven't seen those videos yet, I encourage you to watch those after this. And the reason I do that is because if you look at Fastly, if you look at Elastic, and if you look at Zoom, those 3 stocks, the F, the Z, and the E, those are all in the ETF WCLD. Now, WCLD, if you watched that video, is equal weighted at 2.5% per holding. And you will get, you know, essentially a portion of each of those 3 in that ETF equal weight. Now, Appian is not in WCLD. It's also not in any of the ARK ETFs that I could find. It is in Sky, but it's a low percentage. I want to say it was about 1.4%. So Appian is in Sky. A lot of you guys own both WCLD and Sky. And if you want to capitalize on Roku and you don't want to buy the individual stock, you can buy ARKK, which has about 4.5%. I think it's 4.4% of its position, or of its holding. 4.4% of its makeup composition is Roku. Or you can buy ARKW, and that has about 5.5% of Roku. So Roku is, you know, in ARK and ARKK and ARKW. If you have a blend of the 3, of WCLD, Sky, which is SKYY, and then one of the ARKs, I've mentioned this before, but I like those 3 growth ETFs together because they do complement each other well, and there's not a ton of overlap. So, I definitely encourage everybody that wants some growth to take a look at these ETFs because it's a great way to play these stocks without so much risk, and you still get some of the reward. Obviously, if you go in and you pick the best of this 5 and you just buy Fastly and that outperforms everything, you're going to outperform the ETF that has 30, 40, 50 holdings. But the idea is that if you're holding this long term and you continue to add money to it, dollar cost average, it's a safer way than playing an individual stock, trying to pick one horse in the race. You're picking all of these horses in one pool, thinking that eventually, that they're all going to perform together over time. For example, if you look at WCLD, it's up over 25%. It's nearing 30% year to date on performance. You look at the Sky, it hasn't performed nearly as well, but it has a lot of those larger companies like the Amazons, the Microsofts. They're more established. And then with ARK is not just cloud. It has other things in it. Like the top holding in both of the ARKs I just talked about is actually Tesla. And it has other things like biotech in there as well. If you look at the ARKW, it has things like Pinterest and things that aren't in these other ETFs. So they really do complement each other quite well. And I encourage you to take a look at all 3. So there it is, Phazer, F-A-Z-E-R. You've got the Fastly, you've got Appian, you've got Zoom, you've got Elastic, and you've got Roku. I appreciate you watching this video. I had a lot of fun making it. Please subscribe to the channel if you haven't already. The bottom right-hand corner, there's a little subscribe button. Click that, and then there's a little bell. You need to click the bell so you get notifications. And that way, when a new video comes out, you'll get notified via email, and you can come check out the new video. If you haven't joined our Facebook group, we've got about 2,000 members strong. We have lots of conversations in there, great Q&A. Please go to Facebook and type in Fired Up Wealth. There's a public page, and there's also a private group. So I encourage you to join us there. Thanks again for watching. Have a great rest of your day. Take care.